Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are here for Monday market moves, what happened last week in the markets, and what we expect for next week. All right, news coming up for this coming week. Your hero and mine, Jerome Powell, leader of the Central Bank and Federal Reserve, they're going to have their meeting on December 13th. And the smartest traders in the world, 97% of them, believe that the Fed is going to continue to pause. And about 3% of them think they're going to hike 25 basis points this coming, Wednesday. And then their following meeting, January 31st, still the majority of traders believe that they're going to keep the rates at 5.25, 5.5. And then it's not until March of 2024 where now a lot of traders start to think that they're going to cut, and then the majority of them think that they're going to cut in May. So we shall see. All right, let's move on to the charts. We're going to start off as always with the S&P 500. And so we've kind of ground sideways here a little bit. Oh, let me bring up the daily here. There we go. Kind of ground sideways a little bit for the week. I thought that this was going to be a V-shaped recovery. So, this is just as much and as fast as this moved up in the last month or so. I really thought it was going to touch and then come back down, kind of looking like an inverted V. That's not been the case at all. This is looking more kind of like an arch, and we may just continue to grind sideways here. But see, everything is really stretched out here. All these indicators are towards the upper end of it. I mean, we've been wrong 2 weeks in a row. Maybe we'll be wrong for a third, but I think that the S&P 500 is going to start to roll over here and come down. And then I just drew a Fibonacci in here. I don't even know how, if that's where it's going to hit, but just some possible points down here as far as support would be around there. And it lines up with the 200-day moving average. All right, the DXY, this one's kind of interesting. I drew in the retracement right here, hits right around the 200 moving average. So that's interesting. Kind of looking like the dollar is going to go up. It's got a lot of support underneath it. It's hitting in the retracement. These are sloping up. Stochastic's pretty high, but RSI and MACD aren't. They're sloping up. So it's looking kind of like the dollar is going to go to the upside. Gold, we had a heck of a week last week. Gold closed at a new all-time high, 2152. And we've since come back down to earth, closed the week at 2014. And our next level of real support is going to be around 2000. And then after that, it's going to be around 1950, 1960, somewhere in that range. So would really like to see gold come down here and touch in the like 1960 range. We have a golden cross forming right here. This is right around where the 200, the 50 meet. Would like to see some of these settle back down so that we can get another blast up. And this may be one of the last times to get into gold, before it's off to the new all-time highs and you kind of miss the trade. I'm thinking in the next couple of months, we're probably going to break off and get to new all-time highs, but we'll see. That's just a complete guess. Gold Royalty Corporation looks like it's carved out a bottom here. There was a tick, if you could catch it, on Friday. Check this out. If we go to the hourly here, you can see that, stretch this out just a little. There we go. You can see it hit right on the 200 hourly, lined up really nice with the RSI, MACD, stochastic, and everything just bounced perfectly right off of that. We have a lot of this company. I guess we could have got more, but there was a tick right there if you could catch it on Friday a few hours before close. All right, moving on to silver. This is pretty incredible. We've got, let me bring up the bigger chart there. There we go. Had a pretty incredible correction down here. It blew through any retracements, blew through the 200-day moving average. Looks like it might be hitting on the weekly rate, on the 50-day moving average. 200 weekly moving average is going to be just north of, just right around 23. But what I see coming here, I think it's going to continue going down. Would love to see it hit 22. Would be even better if it hit 21 or 20. Then we could do another trade like we did here with SILJ. So would love to see this correct back down. This one did not correct as much as silver itself. So I expect that SILJ is going to correct a lot more next week, kind of catch up. And maybe we can place another bet here and capture some, little swing trade. All right, and Charles wants to know about Silver Tiger Metals. We used to own this company. We interviewed the CEO, and well, we ended up getting out. I don't remember if we made or lost any money. I think we're about even. As far as a setup here, maybe a limit order, Charles, around 15 cents. And all I'm doing is right here. Oh, here, let me just draw it for you. There you go. So when it IPO'd and then hit down and then up, and this is Canadian, by the way. So I pulled up the ticker you gave me, SLVR. So on the over-the-counter ones, it's going to look different. Remember, limit orders only. This company is only worth like 60 million or something. So limit orders only. Silver exploration. I haven't looked into them at all since I sold my position. But throwing a dart at a chart right here, I think that would be probably 15 cents might be the limit order that I'd be looking at. All right, moving on to copper. Paging Dr. Copper. After looking at this one, so this is copper futures right here. It closed the week at 383, so still tapping on the door of $4. I don't really see any action that would want to make me believe this is going up or down. I mean, I suppose we could put in a little trend line right here. Yeah, see, that doesn't even really work because it closed below that. Yeah, I don't really have an opinion on copper one way or the other for next week. So leveraging that on COPX, I don't see any setup here. No, still, I think I'm trying to make something out of nothing. No, I don't see a setup in this one. Arizona Metals, hopefully they've ground out a bottom just like we think that Gold Royalty Corporation has. But looks like 150 is kind of the floor. Close the week at 162. Uranium, your favorite bet and mine. Awesome. Just keeps climbing. The fundamentals just keep getting better. It is up at, well, these don't even really matter on this one because this is a fundamental trade. But sellers now, according to John Quakes, are asking $83 a pound. So amazing. The Sprott Physical Uranium Trust, we took some profits off up here, and it just continues to climb. They are now boasting a 3.64% discount to net asset value. They've added about £250,000 since the last time we spoke. Pretty impressive, up to 63.1 million pounds of U3O8 off the market. This has just been an amazing trade, and it keeps getting better. I just hope it continues. Okay, URA, still don't really see any entry points here. I mean, it just keeps climbing higher, but I just don't really want to chase green bars here. The only thing I see is a retracement back to this general upward channel trend line, maybe along the 50 moving average. I mean, like if you don't have anything, but I expect the S&P 500 to kind of roll over here. And I think that these equities will probably get drugged down with it. And you can get a better price point than we have right now. Maybe I'm wrong. I don't know. I'm kind of biased though, because we got in all down here. URNM, same kind of deal. Don't really see any entry points here. Would like to see it come back down to, it looks like it's been respecting the 50 moving average now for quite some time. Maybe a correction down to that. We've been taking some off the table. We've taken about 10% of our uranium bet off the table. But if stuff gets cheap again, there's nothing to say we won't buy more. Uranium Energy Corporation still in the clouds, just going up every single week. This is amazing. I don't see any entry points into this. And as a matter of fact, did we hit new all-time? Maybe not. Let's see. Nope, not quite. So still has a little ways to go before we hit some all-time highs. Might take a little bit off the table once it gets up into the 7s or 8s. I'm not sure. We'll see. Denison Mines, same kind of thing. Getting up there. A lot of resistance up above it here, right around where it is now. If it's going to roll over, I think this would be a point where it would do it. Possibly up around $2, and then the final one is around $2.12. Next gen, Wow, look at that candle on Friday. Look at that. Boom. Man, went from 663 all the way and then closed the week at 687. Very cool. Tapping on some I mean, it's just in the clouds here. There's no entry points that I can see at all. You know, again, probably around the 50 moving average. Hopefully we get a washout in the stock market and this will roll over. Uranium Royalty Corporation. This one's pretty interesting. Okay, so this really looks like a cup and handle to me. And we drew a retracement right in here, kind of right about where we are now. So if you don't have any position in this one, may not be a bad time. See, we can see the 50 moving average right here. It's hitting right in this retracement. Let me get rid of this so it's a little easier to see here. We have a limit order in here for $2.50, and kind of every day that goes by, we're questioning whether that's even sane. I don't think it'll get there. Maybe it will. Hopefully it does. But yeah, if you have no position in this company and you want a royalty play on uranium, this is the only one that you can get it. Not a terrible entry point in our opinion. So we'll see. All right, moving on to Nat Gas. Here's Nat Gas futures. Kind of interesting. Looks like it's getting scooped up right here by the 200-day moving average. We can bring this out to a little bit longer time frame on the weekly and take a look. There we go. Don't really see anything other than we have a lot of support, back support at about the level we're at now. So see where that red line is going all the way back there? There's a lot of price action in that zone. And so I could see it holding there, but it does look to me a little bit more like we've got a little bit more downside into this. So our Nat Gas plays here, Devon, you can see our entry points there. We got another limit order in down here for, I think it's $41. Maybe it'll hit, we'll see. Great dividends. Equitable, haven't made an entry into this one yet, but it looks like the entry point is getting better and better. I would be more inclined to enter in this kind of upward channel trend line right here, maybe around 35 bucks, something like that. You might get lucky and it'll hit it. We'll see. You know, let's run a little retracement here just for S's and giggles. Okay, it's around there. Okay. Yeah, did hit through the 200-day moving average though, so that's not great. Okay, a trade that Daniel and I did last week. We put it on, I think 2 weeks ago, and we got stopped out. Let me go to the hourly and then you can see it a little bit better. So here was our entry point. Each one of these bars is an hour. You know, nothing super scientific about this, but basically we were lining up on back support right here, and then we put a stop loss, I think of 47 cents, which it came within a penny of hitting. And then it basically went sideways for a while and then shot up. That's when we moved, or we did a trailing stop, and we got stopped out at, I think, 60 cents. So we made 9 or 10% in whatever that was, a week or something. There was another point back here that we could have caught, and let me go to the 30-minute and you can see it a little bit better. So see how we get this bounce right here, and then we're just off to the races. And check out what kind of move this is. I mean, your realistic entry point probably would have been right there, and 34%. Not bad, huh? In what, 3-4 days? We didn't catch that. I was busy at that time, I guess, and just never saw it. But see, look at this reversal bar right here in the hourly. Pretty interesting. Pretty interesting. It, yeah. So anyhow, that was a quick trade. Moving on to oil. Crude oil futures. What is this? Oh, we need daily. There we go. All right, finally setting up a little bit of back support right here. Closed the week at $71. Would like to see it got down as low as 69, and we grabbed a couple of oil stocks when it did. But if Chris Vermeulen is right, and this actually gets down into the $40 range, which let me back up here on the weekly so you can see, you know, whereabouts that is. And, you know, this is 40 bucks right there. We'll put in a horizontal trend line. So look at all the points where it's hit $40, 2004, 2008, when is that? 2016, 2020. Maybe he's right. Maybe we are going to hit in $40 oil. I think if we do, we basically have to double our position in our oil companies, because I have complete confidence that when I go out and try to start my truck, it's going to start because we still have gasoline. So can't do that without oil companies. But here's the 200 weekly. That's interesting. And the daily, kind of down in no man's land. I don't know. As far as limit orders that hit, we had one limit order that hit for $82 on XLE, the oil ETF. Had two limit orders that hit for XOM. We had one at 100 and another one at 99. They both hit. And then our favorite oil royalty play, Blackstone Minerals, we have two limit orders in for that. One of them hit at 16, I can't remember. It was right around the 200 moving average. And then another one hit for $16. And then we placed another limit order for $15. So we'll see. Hopefully they do hit. I mean, when you take a look at these dividends, I mean, going back to 2016, 5.8%, 6.7%, 8.6%, 11.6%, 10%, 7%, 9%. I mean, pretty cool. We also had two limit orders hit for Woodside Energy. So when oil got washed out, we had a whole bunch of limit orders that we had set for 60-day good till cancel that hit, and these are them. I got one at $20 and another one at 19 for Woodside Energy. They got pretty good dividends as well. I mean, 3.5, 3.6, 3.6, 1.9, 8.2, 10.2. Pretty cool. And then this is just a chart simply because I like it. This is uranium as opposed to crude oil. And we can see that uranium, a pound of uranium is 1.15 times as expensive as a barrel of oil. I don't know if that really tells us anything. I just think it's cool. All right, moving on to coal. So we had Matt Warder on the show. We'll put a link up here if you guys want to watch him. Deep dive into coal. It was kind of a beginner's, how to invest in coal. Awesome episode. We're going to have Matt back on, I think, every couple of months and just kind of get an update in this sector because, it was great. One of my better episodes, I think. Okay, coal. So this is thermal coal. Closed the week at 153. This is met coal, which is where Matt sees the opportunity. Closed the week at 334. Now, he did say that there's a lot of seasonality to this, and so we're probably going to get a correction in met coal back down around 200 to 250. That will kind of be when we're looking for our entry points. Glencore, still got our limit orders for that. Didn't correct down as quick as we thought it would, but we're holding fast at 1050 and 950. We'll see if those limit orders actually hit. And then what was this one? Morian Resources. I'm sorry, I can't remember who asked about this one. Anyways, if I see any setups here, possibly one there, maybe another one down a little bit lower around like 15 cents, maybe 12 or 13 cents. I mean, you might be catching a falling knife here. That's the risk. So I would feel a little more comfortable kind of getting down towards like this end of the chart down here and see what it looks like. You kind of want it to like grind a little sideways for a bit. See, like it did right here. See how it hit, and then you could have got in on that one or that one. You know, I'd like to see it do that either sideways here or maybe even down here a little bit. Bitcoin. Okay, Bitcoin's still floating in the clouds. Almost 44,000 is hitting a little bit of resistance there. Then a couple other companies that just got some comments on BHP. I like this company a lot for dividends. I suppose the dividends have been going down a little bit in the last while. I think maybe everyone got used to the 8 and the 11% dividend, but I mean for the last few years here, 4.5, 4.7, 4.5, 4.8, 8.2, 11.5, 5.6% dividends. I mean, that seems pretty good to me. Rio Tinto, same kind of thing. 4.4, 5.5, 6.3, 6.4, 6.1, 11.8, 6.9. I don't know. That seems like a good deal to me. Okay, another trade we had in that we got stopped out. This is NAT. And basically, not super scientific. We put it in here, and then we got stopped out down here. The setup that we saw in here was, we thought that there might be a little bit of back support right there, and if it got below that, then we're out. And anyways, I think we lost 3% on that one. Limit order that we put in is on SPPP. This is the Sprott Physical Platinum and Palladium Trust. If I go to the daily here, after talking with Christopher Mullen, he might be right in that you're just trying to catch a falling knife here. And I mean, you know, there's one entry in there for $10, and now we got another one, limit order in for $9. But when you look at the corrections on these, what tends to correct this market is that, you know, all of a sudden we can't buy platinum and palladium from South Africa or from Zimbabwe or something. And when you get these radical spikes like that, that's what's happened, is there's been some type of disruption in the supply chain, and this corrects. You're not going to catch it. You got to be in it before that happens. So this is our speculation. We'll see if it works out. Bonds are starting to turn around. So take a look at this. Okay, so we started kind of just buying these little dips here on TLT. So that'd be the 20-year bond. You're not buying this bond for 20 years and then collecting on it. This is essentially a way to trade it, right? Okay, highly risky. But then after going to the Silver Symposium and talking with some guys that really thought that, you know, this was a stupid bet, we took half our bet off the table. So this position went from 4% of the portfolio to 2%. And of course, a few weeks later, that was exactly wrong, because it started to slope up, and kind of wishing we hadn't sold that, but whatever. That was the information we had at the moment. So this will be interesting. This is saying basically that the market believes that the Fed is done hiking rates and they're going to start cutting here soon. So we shall see. And this one I just wanted to bring up as a last final one. Remember the 4-week T-bill, okay? You can get paid 5.29% for zero risk. It is absolutely guaranteed by the government that they will pay you this, right? So remember, whatever cash you have, right? So hopefully you got at least 20 or 30% of your portfolio that is in cash. So if we have a market drawdown and an absolute liquidation crisis, we can buy, you know, these uranium or oil stocks dirt cheap. They may actually be expensive now compared to what they're going to be in 6 months. And in the meantime, you get, for every $100 you give them for a year, you get over $5. Not a bad deal at all, especially when it's guaranteed, because you know what they're going to do? They're going to print it. All right. Well, I hope you guys got something out of that. Support the show and hit the like, subscribe, and share this with anyone that you think needs to hear it. Thank you for tuning in. Have yourself a great rest of the day, and we will talk to you next time.